The height of the market wanted this gigantic price, and now the market dropped, and so people are like, I don't need to sell, I'll just wait. And now that's been a year or so, and sellers are now starting to come down off their pricing, and we're starting to see deal flow come up. We're also starting to see some more distressed assets coming to market as well. So we're seeing this buying opportunity, but like you said, people are afraid. It brings up the question, listen, people say, oh my gosh, I can't believe what you're going through. Like, this is awful. It sounds to me like now is pretty much a bad time to invest in multifamily, right? What's your response to that? Let's talk about that. Hey, should people just wait and see what happens a little bit? Is it maybe like, what is your feeling about that? Wait and see or get involved?
I understand why people are thinking this way. In fact, I was at an investor event over the weekend. One of my buddies was throwing, and I actually got to talk face to face with multiple of our investors. The sentiment is right now, if you did a deal recently and with any operator, and it's in a variable rate loan, you're probably not getting your distributions. You may be in a tough situation where you have to consider a capital call or something like that. And so there's this overall sentiment of like, you know what? Multifamily sucks. It's not where I want to put my money. I'm not comfortable with it because of what's just happened. I don't think it's a good investment even. People are thinking that way. A lot of people are. And I mean, I said, listen, I understand what you guys are going through. It wasn't with us, but it was with a different operator. I'm like, I get it. I get why you're thinking that way. It's you guys are just kind of blanketing the entire industry as a whole. But the reality is that this is with stocks, this is with any kind of asset. The goal is to buy low and sell high, like that at a certain point. And there's a trade-off now. You have these multifamily apartment complexes where maybe they're not spinning off as much cash as they used to because interest rates are higher and it's eating into it. But the pricing has gone so far down. There's no way that these things are not going to win with enough time. We saw the peak, so we know where things peaked out and we know how far they've fallen. That is clear. And so because of that, we can see that the things are down 40, 50%, anywhere from 30+%, that everything has dropped. And so it's a really good time to take advantage, but everyone's scared. I get it.
Right. And that's the problem. That's the problem right now is we're seeing this opportunity right now, and it's harder to raise capital. And not so much from new investors per se, but from investors who have been investing in this for 1, 2, 3, 5, 10 years. Those investors kind of see what's going on over the last couple of years because maybe they've invested in some variable rate properties and they're being affected in a way that you just described, Garrett. The frustrating part to us is we're actually seeing opportunity. We're seeing buying opportunity. We're seeing buying opportunity in an asset class that is fundamentally strong. We have unprecedented demand for affordable housing. You can't build affordable housing. The only thing you can build is Class A housing because of the cost of construction. So that's not going away. So if you can't build more affordable housing and the population keeps growing, what's that going to do to the rents? It's going to drive up the rents. That's what's happening. And the sellers back in March of 2022 at the height of the market wanted this gigantic price, and now the market dropped, and so people are like, I don't need to sell, I'll just wait. And now that's been a year or so, and sellers are now starting to come down off their pricing, and we're starting to see deal flow come up. We're also starting to see some more distressed assets coming to market as well. So we're seeing this buying opportunity, but like you said, people are afraid. And this is this counterintuitive thing. If you replay it back to March of 2022, the height of the market, probably we should have bought less. People should have invested less. But no, everybody and their grandmother got into multifamily, right? Kind of a sure sign that the market is overheated. And now it's exactly the opposite. Now everybody's like, no, I don't want to get in. I'm going to wait and see what happens. And we're going to collectively miss the boat on what I think is going to be one of the biggest wealth creation opportunities since 2008.
It is absolutely one of those times where it's just like what Warren Buffett said, where it's like, be fearful when others are greedy and greedy when others are fearful, right? And that's absolutely true right now. It's just difficult to see past what's happening if you've already done some of these investments and not going exactly your way.
And this is this difference between sophisticated investors and less sophisticated investors. And here's the thing, we're all affected by emotion, but there was an article in the Wall Street Journal recently about some kind of equity fund, private equity fund, literally within and billions of dollars going after office space in San Francisco, which of course has been in the news about how empty they are and it's distress and it's going to hell in a handbasket. All of a sudden, someone comes up with $2.4 billion to buy up this essentially half-empty office space, right? That's exactly what they're doing. They're getting into something where everybody has run and is still running and hiding from this office space. And they're like, oh, interesting. I know something you don't know. And they're going in big. And I think that's what needs to happen collectively. All of us. We can't be afraid to pull the trigger on a deal, right? Because we know that we're getting unprecedented opportunity. Also, our investors need to understand that stuff that happened 2 years ago is vastly different right now. We need to collectively overcome our fear and really look at what's going on right now, educate ourselves, and look at these deals and see that the opportunity is different than it was 2 years ago.
And I get there's other people out there that might be like, well, why should we trust you guys because you were wrong before? And I understand that thought process, but we had two black swan events back to back, and there may be another one, but there was a black swan event that pushed things in the direction that favor of multifamily, then another one that pushed it completely against it in a very short amount of time. And in history, there's always some version of that. We had, but maybe not two back to back like this, but the chances of there being a third are probably low, I would imagine. And we've already gotten past the worst part as far as what we've seen with this inflection up and down. And so that's all related to markets and the economy specifically. And so because we're past that, we can see a lot more clearly into the future. We don't really know where exit caps are going to be in a certain amount of time, where interest rates are going to be, those things. But we know how to protect the downside big time now through lower leverage, through fixed rates. And we also know that the pricing is very far down in the other direction from where it was, which is a really good sign. And history will tell you that it's a good sign. That's when you need to buy. And so could we be wrong again? Absolutely. But we've been doing this for long enough where we've seen a lot, and we know that these assets are still very sound, and we know how to operate them and run them. And so we just protect the downside on future deals. We can do a lot of good things on these things to push them in the right direction. So one thing about us, we're extremely resilient, and we have a lot of knowledge and experience in the space. So I think when you have that the odds are stacked in your favor in general.
So let's pivot a little bit from kind of high market and should I get started? The answer is, of course, look for the opportunity right now. Be smart, but look for the opportunity. And let's talk about raising capital and what I hear a lot of people complaining about. I really always have, but they complain about not being able to raise enough money. They're going to run out of people in their network. And what are they going to do once they do that? Now, the truth is, if you follow our process, we call it the Dealmaker Blueprint correctly, you'll never run out of people to talk to. And it doesn't require you to become a master networker or some kind of online marketing ninja or something like that. And so the answer to that really is referrals. Now, you told me the story about Cutco Knives, because you worked for Cutco for a time. And how did Cutco train and solve this problem? Because you didn't run out of leads to call on. Why was that? And how can people apply that same principle to raising capital?
So when you're selling Cutco, it's basically like, it's not really door-to-door knife sales. It's more like warm leads, knife sales, like kitchen knives. And what most people do is they enter into the program and they visit their friends and family, and then they run out of leads, and then they can't continue to sell knives because they have no more leads. So they can't go visit, do appointments, sell more knives, and then they just stop doing it, and that's it. So for me, I got started at a time where, first of all, I had a pretty big why, which I've said before in different podcasts what that was, but I had a lot of money I owed, and I had to pay it off. So I needed to make money quickly. So my friends had actually gone, all my friends and family already that were in the program. So I had to start. I didn't even really have a long runway with the friends and family. And so I got really good at the other side of it. The only way you can last in this business is by getting referrals, getting leads from other people, warm leads. And so the way that you did it in Cutco is you had a specific thing that you would say. It was scripted out, and you had to deliver on it, and you said it at the end of every appointment. And then you had a couple of things that you could do to help influence people. The way I would do it is I would start out the appointment and I'd say, hey, I need you to get me 3 things: a penny, a piece of fruit, and then I need you to get me your phone book. And back then they had those phone books that were like the, like the personal phone books or whatever. And so they would go get a penny, the fruit, and the phone book, and then I'd cut the penny, I'd cut the fruit doing the thing, and then at the end I'd ask for the leads. I'd say, all right, this is the most important part. Here's what I need you to help me with, and then there was a whole script, and then I'd be like, I need you to go find me the numbers for these people. You'd have them write down all the names of people that they knew that were good friends of theirs without anything, just their names. And I'd have them do that in front of me. And then they'd say, okay, now I need you to find the numbers for them. And they'd be like, well, I don't know where that is, like how I can get those quickly. And I'm like, well, your phone book's right here. Remember, you got that for me in the beginning.
I can help you with that problem.
Yeah. So then they're like, oh, okay. And then I'm like, all right, listen, I'll make it a little bit easier for you. I'll give you this peeler if you can get me up to 10 names. And then you'd ask them to call these people and reach out to them for you. And it was like all like in a favor or whatever. And it wouldn't always work every time, but you always tried. Every time you took shots, and eventually you get enough lists to be able to have enough people to call and set up appointments. And if you go see one more person, they can get you a list of 10 people, and you keep going. And that lasted me for 6 years.